We are Group 8, consisting of Alex Schaff, Manwinder Singh, Caitlin Woodbury, and PJ Moyes. We are going to discuss some of the developments in the global financial and merger markets that have occurred over the past week. First, I am going to talk about some of the equity and debt financings that are going on. A notable acquisition this week was Whitecap buying Western Canadian Oil from Imperial Oil for $855 million. Lately, the energy sector has been experiencing a surge in mergers and acquisitions. This first quarter of this year has already produced 10 times the amount that the first 3 quarters of last year did combined. This is due to a positive outlook on the industry after a rough previous year. The original issuance was $500 million in subscription receipts, but have already received over $1 billion in orders. Whitecap is also selling off some of the assets that they are acquiring to help fund this deal. Another large acquisition this week was Vodafone. They announced a $1 billion acquisition of Ono, a Spanish cable company. Last year, they entered a similar deal, buying out a German cable company for $7.7 billion. This is needed to be able to compete with other providers that offer bundles or packages of services like broadband, mobile, fixed lines, and TV packages. Vodafone has recently come into a large sum of cash after selling their 45% stake in Verizon Wireless for $130 billion. This acquisition will be financed using some of that cash, as well as using debt to complete the transaction. By acquiring Ono, Vodafone will save about $200 million annually from synergies, as well as obtain 2.5 million customers in broadband and mobile services. Next, I am going to discuss a few developments in the merger markets. The large merger between Comcast and Time Warner, which was agreed to last month, is currently undergoing investigation by several states to determine if the merger violates antitrust laws. This deal is valued at $45.2 billion. People fear that having too few cable providers will mean having to pay a higher price. On the other hand, content providers are concerned that too few buyers could mean leverage for the cable providers in negotiating down their fees. The Comcast-Time Warner merger would consist of 30% of the U.S. TV video market and 30% of the high-speed internet market. This now has to go through the Justice Department as well as the Federal Communications Commission to have the deal approved. Another large merger in the television industry was between LAN and Media General, valued at $1.6 billion. This merger will include 74 stations and reach about 23% of the U.S. market. Media General is going to use $763 million in cash, with the remaining balance to be in the form of stock. The enterprise value of the deal is $2.6 billion. Combining these companies will form the second largest TV broadcasting company behind the Comcast-Time Warner merger, which I previously discussed. Media General projects $70 million in operational savings over the next 3 years and gives them the opportunity to better compete and grow their profits.
I will give a brief overview of economic conditions both in the United States and worldwide. First, the United States. In 2008, the national debt in the United States was $9.2 trillion. Total U.S. debt is forecasted to increase to nearly $20 trillion by 2020, which is about 140% of total gross domestic product. The unemployment rate is expected to remain unchanged in 2014, staying near 8%. Also, potential real GDP will lose approximately 2.3% of its annual gains between 2019 and 2033. Much like the U.S., debt in Japan, Greece, Italy, Portugal, and many other countries are all above 100%. Additionally, the International Monetary Fund lowered its growth estimates for the global economy to about 3.5% for 2014. The top 6 potential risks to global economic growth over the next year are geopolitical instability, lower consumer demand, domestic political conflicts, increased economic volatility, new asset bubbles, and transitions of political leadership. 70% of respondents cited the number one risk as geopolitical instability, and political unrest in Ukraine will likely slow growth. The top 3 risks for domestic growth are inflation, increased exchange rate volatility, and government intervention. I will now go over some recent regulatory developments. The Finance Law was enacted on December 30, 2013. This bill includes new taxes on large companies and consists of an increased tax on high compensation paid by companies. It also includes a 5 to 11% corporate tax increase on companies earning revenue exceeding 250 million euros. The bill to combat tax avoidance was enacted on December 7, 2013 in France. This bill contains a number of measures to combat tax avoidance and evasions, and changes were made to France's transfer pricing documentation requirements. A no-action letter was enacted by the SEC on February 3, 2013. The no-action letter advises that M&A brokers do not need to register as broker-dealers to facilitate mergers, acquisitions, and business sales.
Next, we will talk about some important news regarding investment banking firms. Bank of America is cutting jobs across Co-Chief Operating Officer Thomas Montague's global trading and investment banking units. The dismissals at the second largest U.S. bank will affect fewer than 5% of the employees in the units. Banks have been cutting workers for the past 5 years and still haven't settled on the right workforce size. Deutsche Bank is also weighing reductions in coming months across corporate finance, capital markets, and trading businesses. The cuts are partially a result of the company's decision to increase base pay for senior bankers. Barclays is another firm that is planning an overhaul of the investment bank, including staff reductions and exiting some unprofitable business. Data compiled by Bloomberg show financial firms worldwide announced plans to cut a total of more than 317,000 jobs over the past 2 years. Another firm that is in the news is JP Morgan. JP Morgan's China investment banking CEO Fang Feng is leaving after more than 12 years at the firm. Fang's impending departure comes amid an investigation into JP Morgan's Asian hiring practices. U.S. authorities are examining whether the firm employed people in Asia so that their relatives in the government would steer business to the bank. Prior to joining JP Morgan, Fang was former vice president of Beijing Enterprises Holdings, an investment company controlled by the government of China's capital. Regulators are probing the hirings to determine whether JP Morgan violated the Foreign Corrupt Practice Act of 1977, which makes it illegal to provide payments or benefits to government officials to win business.
In the U.S. markets, the quarterly trade deficit reported that big gains in exports and overseas investment income narrowed the United States' current account deficit in the fourth quarter to the lowest level in 14 years. Also, more Fed officials say 2016 is the year for rate increases, pushing back rate increases and keeping the market strong. Choppy trading on Friday and recorded their biggest weekly gain in a month, helped by a rally in basic resource stocks and some positive technical buying signals. Also, this happened from more confirmation of China's purchasing of metals and mineral supplies. Also, protests in Paris against France's anti-immigration National Front caused a small drop in the CAC 40 index. In the Asian markets, the Nikkei slumped to a 6-week low after Yellen's rate comments, while Asian stocks gained with the Nikkei shut for public holiday in Japan. Hong Kong's Hang Seng Index lagged behind the rest of the region Friday, raising 0.17% despite a sharp sell-off in the previous session. The Hang Seng is one of the world's worst-performing major stock indexes, down 9% so far in 2014. China had its first-ever domestic bond default this month from a missed interest payment from Shanghai Chaori Solar Energy Science and Technology Company, which shattered the belief that Beijing would always bail out struggling companies. They are instead letting the market determine winners and losers and who survive. In foreign exchange, the euro edged higher against the dollar as the dollar took a breather following a rally in the previous 2 sessions, sparked by prospects for an earlier than anticipated rate hike by the Federal Reserve. The euro also rose on news of a record monthly Eurozone current account surplus. The pound also closed to 5-week lows against the dollar as growing expectations that the Federal Reserve could raise interest rates sooner than anticipated, which support an increase in the dollar. The dollar slipped lower against the yen as fresh tensions between the West and Russia over Ukraine bolstered a safe haven demand for the Japanese currency. The Chinese yuan also fell against the dollar, dropping to its weakest level in 8 months after China pulled the currency's trading ban over the weekend. With the unrest in the Ukraine, commodities like gold and other metals have increased in value as investors have become more uncertain about markets. Gold is at its highest price in more than 6 months, thanks to economic and political uncertainty in places like Argentina, Venezuela, Turkey, and of course, Ukraine. New York traded crude oil futures ended higher as investors continued to monitor developments in the Ukraine-Russia conflict amid concerns over a disruption to supplies. In LBO news, stock prices for Barnes & Noble and Safeway rose in recent news of buyout offers. G Asset Management, a small private equity group, offered to purchase 51% of Barnes & Noble at a value of $22 a share, or just the Nook at a value of $5 a share. Also, there is no price tag on the deal yet, but Safeway finished up 4.3% after confirming that it was in talks to sell itself to Cerberus Capital Management. Asia also saw its first high-yield bond issued since 2011, issued by Chinese IT consulting and outsourcing company Pactera. They sold a $275 million bond that can be called in the third year with a coupon of 8%. The U.S. Office of the Comptroller of the Currency issued new guidelines to banks limiting the leverage in leveraged buyouts and is making it clear that there is no exceptions to banks asking to increase the leverage limit of 6 times a company's cash flow and will be charged $1 million per day and cease and desist orders from the OCC as well as action by the Fed if they exceed the current limit. In Paris, Dominique Strauss-Kahn, formerly of the IMF, is hoping to raise $2 billion for a hedge fund for LSK & Partners, a Luxembourg-based investment firm. He is hoping to use his extensive experience as well as policymaking to create a lucrative career as an investment manager. He also says the fund will be plain vanilla and won't use any leverage. A new style of investing in mutual funds has been developed to mimic successful strategies used by hedge fund managers. These are strategies which typically involve spreading bets around so that if one asset drops in value, another could log offsetting profits. The former holding company for the automaker Porsche won a long-running legal battle with a group of aggrieved hedge funds after a judge in Stuttgart dismissed a suit seeking damages over events leading up to its unsuccessful attempt to acquire Volkswagen.